Despite U.S. intelligence warnings, many European and Ukrainian officials didn't believe Russia would invade. Their logic? It would be irrational of President Vladimir Putin and far too much for his army to bite off. Nonetheless, Putin, incensed by what he saw as Ukraine's westwards pivot, ordered his, quote, special military operation. Russia's invasion of Ukraine upended geopolitics. NATO expansion was the very thing Putin opposed. Now the alliance is poised to add Finland and Sweden. Previously, Ukraine struggled to get the West interested in its conflict with Russia, but it's now receiving unimaginable international support. The U.S. is providing the lion's share of the financial and military aid required to keep Ukraine in the fight. Meanwhile, harsh sanctions are shrinking Russia's role as one of the world's big energy and commodity producers. Even a temporary ceasefire is looking hard to achieve. Ukraine insists Russia must withdraw from all its territory, including Crimea, before any peace talks happen. Russia can expect more Western attempts at isolation in 2023, including of Putin personally. Iran, North Korea, and Belarus remain staunch supporters, and China and India are buying heavily discounted Russian oil. But Beijing hasn't been as publicly supportive as expected. Moscow will also have to manage its sanctions-hit economy while potentially slashing funding for services. And economic stability is linked to political stability. Sources told Reuters in October that Putin's grip on power could also loosen quickly if defeat in Ukraine looms.
Wall Street ended lower on Tuesday, with the S&P 500 extending its losing streak to 4 sessions as skittish investors fretted over Federal Reserve rate hikes and further talk of a looming recession. The Dow fell more than 1%, the S&P dropped over 1.4%, while the Nasdaq shed 2%. Tim Courtney is Chief Investment Officer at Exential Wealth Advisors.
I think what we're seeing in markets today is the continuation of the interest rate story that started, at the end of the first quarter this year. And that means those most interest rate sensitive areas of the market, like the Nasdaq, like large growth stocks, they're falling more. They're falling more today. They fell more yesterday. If you're more sensitive to interest rates, you've had a bad day over the last couple of days.
Among those large growth stocks, Apple, Amazon.com, and Alphabet all fell between 2.5% and 3%. But it was Meta Platforms that really dragged down markets, its shares sliding 6.8% following reports that European Union regulators have ruled the company should not require users to agree to personalized ads based on their digital activity. Financial titans also pointed toward uncertain times ahead. Bank of America's chief executive Brian Moynihan predicted 3/4 of mild negative growth next year, while J.P. Morgan Chase CEO Jamie Dimon said inflation will erode consumer spending power and that a mild to more pronounced recession was likely ahead.
Donald Trump's real estate company was convicted on criminal charges Tuesday of carrying out a 15-year-long tax fraud scheme, adding to the legal woes facing the former U.S. president as he campaigns again for the White House in 2024. Jurors found the company guilty on all 17 counts for a scheme prosecutors say included the company paying personal expenses for top executives, like rent for luxury apartments and car leases, without reporting the income, and that the company paid them bonuses as if they were independent contractors. Former CFO Alan Weisselberg, who pleaded guilty in August to concealing $1.6 million in income from tax authorities, testified in this trial that Trump himself signed the Christmas bonus checks and personally paid hundreds of thousands of dollars in private school tuition for Weisselberg's grandchildren.
It'd certainly be appealing, of course.
Alan Futerfoss, a lawyer for the Trump Organization, said the criminal law governing corporate liability was vague.
And it was central to the case. So I'm sure that will be among other issues that we take up on.
The jury deliberated for a total of 12 hours, and the judge set a sentencing date for January 13th. The Trump Organization, which operates hotels, golf courses, and other real estate around the world, faces up to $1.6 million in fines, an amount that is not expected to be material for a company the size of the Trump Organization. Still, the conviction could complicate